Hey everyone, welcome back to Corporate Decoder, the place where we uncover the not so obvious secrets hiding in plain sight within company filings. Today we're diving into Apogee Enterprises, and let's just say there's a change at the top that's got our attention. We're going to decode exactly what this means not only for the company but for its future direction. Now this report is dated August 7, 2025, and it's telling us about some significant shifts within Apogee Enterprises. It's a current report, meaning it's about something important that just happened and needs to be shared right away. You know how sometimes a company announces a new leader and it's all just a formality? Well, this filing makes it clear that with Apogee Enterprises, this isn't just a change of faces, it comes with some solid financial backing and a clear commitment to the future for this new leader. Apogee Enterprises is publicly traded on the Nasdaq stock market under the ticker symbol Apogee. This means ordinary people like us can buy and sell shares of the company. And as with any publicly traded company, changes in leadership often signal potential shifts in strategy or execution, which is exactly what we'll look at today. The big news here is about a change in a key leadership position. The board of directors has appointed Troy R. Johnson, a seasoned executive within the company, to lead the architectural metals division. This is a pretty important segment for a company like Apogee. He's stepping into the role previously held by Nicholas C. Longman, who has moved on. This transition is effective August 7, 2025. When a company appoints a new leader for a significant division like this, they don't just hand them the keys, they also make sure they're compensated well. Mr. Johnson is set to receive a base salary of $505,050 annually. That's a substantial number and it reflects the importance of his new role. But it doesn't stop there. He's also getting a significant chunk of the company's stock. A grant worth $325,000 in restricted shares based on the stock price on the day of the grant. This essentially means his pay is tied to the company's success over time. These are restricted shares, meaning he can't just sell them immediately. They come with a 2-year vesting schedule. This means he has to stay with the company's success over time. These are restricted shares, meaning he can't just sell them immediately. They come with a 2-year vesting schedule. This means he has to stay with the company's success over time. These are restricted shares, meaning he can't just sell them immediately. They come with a 2-year vesting schedule. This means he has to stay with the company's success over time. These are restricted shares, meaning he can't just sell them immediately. They come with a 2-year vesting schedule. This means he has to stay with the company's success over time. These are restricted shares, meaning he can't just sell them immediately. They come with a 2-year vesting schedule. This means he has to stay with the company for 2 years, and as long as he does, all of those shares will become fully his on the 2nd anniversary of his appointment. This aligns his dictus directly with the share. Furthermore, Mr. Johnson will continue to participate in the company's annual short-term incentive plan. What's really interesting here is that for the next 2 fiscal years, 2026 and 2027, he has a guaranteed minimum payout of 100% of his target incentive. This offers him a level of income security and shows the company's confidence in his ability to perform and hit his targets. It's a strong signal of commitment from the company to its new division leader. The company has also issued a press release to announce this leadership transition. This information is being furnished to the SEC, meaning they're providing it as a formality, and it's not considered part of the official filings that get deeply scrutinized or become legally binding in the same way as some other sections. This press release dated August 7, 2025 is included as an exhibit to this report. It will contain the official announcement and likely some positive spin from the company about this executive move. And finally, under item 901, we see the exhibits associated with this filing. Exhibit 99.1 is that very press release we just discussed, the one announcing the officer transition. And Exhibit 104 simply refers to the interactive data file that's embedded within the filing itself. This is standard practice for making the financial data machine readable. Now, let's shift gears into our analysis. We don't have specific financial tables in this particular 8K filing. It's more focused on the executive appointment. However, the compensation package for Mr. Johnson provides us with some insights. A salary of over $500,000 combined with a $325,000 stock grant shows that Apogee Enterprises views the architectural metals division as critical, and they are willing to invest heavily in its leadership. The guaranteed short-term incentive for 2 years also speaks to a desire for stability and performance in this role during a potentially transitional period. From a Warren Buffett perspective, we'd want to understand the economic moat of Apogee's architectural metals division. What are its competitive advantages? Is it brand reputation, proprietary technology, cost efficiency, or something else? The significant investment in leadership suggests the company sees strong growth potential or perhaps a need to defend market share in this segment. One key risk to consider is the broader economic environment. The construction and architectural sectors can be cyclical, heavily influenced by interest rates and overall economic health. If the market turns south, even a well-compensated executive might struggle to meet targets. Conversely, if the economic winds are favorable, this investment in leadership could pay off handsomely. We need to ask ourselves, is this a strategic move to capitalize on an expected boom in architectural metals? Or is it a defensive play to retain a key executive during a competitive hiring market? The guaranteed incentives suggest the company is prioritizing retention and predictable performance, which could indicate either strong confidence or a need to mitigate risk. Looking at the future direction, this appointment signals a focus on strengthening the architectural metals segment. The company is betting on this division and its new leader. Whether this is a wise bet will depend on various factors, including market conditions and Mr. Johnson's ability to execute his strategy. It's a high-stakes game where the company is showing its hand by investing significantly in its top talent for a key business area. This leadership stability, backed by substantial compensation, is often a precursor to growth initiatives or a period of intense focus on operational execution. So to sum it up, Apogee Enterprises is making a significant investment in its leadership for the architectural metals division. This comes with a handsome compensation package and performance incentives for the new president, Troy R. Johnson. It signals the company's commitment to this segment and its belief in Mr. Johnson's ability to drive success. The real story here is the company's confidence and investment strategy being channeled through its executive appointments. That's our take on this filing. What's your opinion on these executive moves and the company's strategy? Let us know in the comments below. If you found this breakdown helpful, please give it a thumbs up and subscribe for more corporate insights. And don't forget to join our Discord community for ongoing discussions. The link is in the description. Thanks for watching, and we'll see you in the next Decode.